for an overview of the zinc market, we'll hear from CSA Global's Mark Allen. CSA is a leading mining consultancy. Mark is a geo who brings a broad experience in zinc, including with Pasminco, Oxiana and Oz Minerals. Would you please welcome CSA Global's Mark Allen. Mark.
Thanks, Andrew. Thank you very much indeed, and thank you very much for listening. I will be looking at the outlook for zinc, and this is the title that I was given. I didn't write this, and when I saw it, I saw the word fickle in there used to describe the zinc industry. So now I was thinking, you know, is zinc really fickle? Why is it fickle? How is it fickle? And one has to consider both how it has performed in the past and where it will come from in the future in order to answer that sort of fairly simple question. So Economics 101 on the value of a thing is driven by the supply of it and also by the demand for that particular commodity. So on the supply side, in this we're going to look at the reserves that are known in the world. We're going to look at the resources that have not yet been moved into reserves. We'll have a critical look at the undeveloped projects around the world, and then consider where zinc is used and how that will fare in the future. As Andrew said, I once upon a time worked with Pasminco, and Pasminco had the claim to fame of being the world's largest producer of zinc in those days, and that was in the 1990s. And in the 1990s, the price of zinc was about $1,000 a ton. On a good day, it might be $1,200. I worked with in new projects in Pasminco, and we had an evaluation price of $1,600, which some people considered to be pretty optimistic in those days. But there was always the idea that somehow lead and zinc, and we were big producers of lead and zinc, that this was under threat by new technologies such as different sorts of batteries, different sorts of coating for steel, and that, you know, ultimately the lead and zinc market would decline because of replacement with other technologies. The price over the last 20-odd years, 1992 was actually when I started really in the zinc industry, and you look at the red line on this chart and you go, yep, that is one fickle metal. For no apparent reason, the price goes up, price goes down. The apparent reason in sort of 2007-ish, 2005, big rise in price accompanying falling stocks. Of course, in the 1990s, stocks falling were accompanied by a little, what you might consider to be a blip in the price chart. And then we seem to see a change in the baseline of price from about $1,000 a ton to maybe a bit over 2,000. And in the last little while, the price of zinc has climbed reasonably steadily in response to probably falling stocks, or it may be in response to something else. I put an orange, there's an orange arrow on the chart at 2015. The orange arrow corresponds to the closure of the Century mine and the Lisheen mine in Ireland. And that was, Century was about 5% of world production, about 500,000 tons per year. And but we've known that that was going to happen for a long time. We've known that that was going to happen since the mine opened in 2000. So there was no surprises, and you'll note that the arrow is not exactly on the peak of the falling stocks. So we would have to conclude that it's, there's more than one factor in play in controlling the price of zinc. Going back to 1900, there's a few lines on that. The blue area is the annual zinc production, and looking at it over a longer term, I would say that it is not fickle at all. The red line is the price of zinc in not today's dollars, but 1998 dollars. The black line is the price in dollars, US dollars, and the straight-ish line, the one that doesn't wiggle up and down. What color is it on that? It's green. Oops. That is the world population in billions. So from that, I would suggest that there are three parts to that graph. Prior to the Second World War, essentially, the production and use of zinc has gone with population growth. After the Second World War, I would say that lifestyles in general changed a little bit. I would call that sort of enhanced consumerism in the 1960s, and up until 2000. Once again, the consumption of zinc has paralleled population growth in the world. There's another little orange arrow on that that's 1995, and in the top corner there's a little picture of China's GDP. And the lift-off in the last 10 years on the right-hand side corresponds to the essentially doubling every 5 years in Chinese GDP. The world production a few years ago, and this is USGS data because it's the most complete data set, is now dominantly from China. In previous years, countries like Canada, or Australia, Canada, and the United States were the dominant players. China has certainly, absolutely no doubt, ramped up its production of zinc immensely in the last sort of, I would say, 10 years. This is the market balance, and it's an attempt to express the use and production of zinc over the last few years. The right-hand 4 years, 2017, so it's 2018 to 2020 are forecasts, and the white dots indicate, so if the white dots are below zero, then we're using more than we're producing. And we can see a fairly consistent deficit since the closure of Century in 2015. And we can see, although it's not as spectacular in this chart because the scale is different, but a consistent drop in stocks consistent with the undersupply of zinc in the last 5 years or more. So where is this going? We produce zinc from mines, we produce a little bit from recycling. Recycling of things that we've used and recycling of residues and co-products from the smelting process. And, but most of it comes from mines. I dragged out the production data for all the mines who have known production, and I would hasten to point out that not all the zinc mines in the world we actually know the grade and tons of production. Some of them we only know how much they've produced, but we don't know what grade they've produced. So there's a set of grey bars and a set of blue bars on that. The grey bars are the ones what we know, and the blue bars is the total production for the world. And it's reasonably complete. But within the deposits and mines where we know the production, we see a pretty consistent drop-off in head grade. And I was looking at that and going, yeah, we've gone from 8% to 3%-ish as being the average head grade. Last three, again, are forecasted from the figures that mines have put forward to say what they will produce. Forecasts are not always correct. And I was wondering if that's a real trend, or if that's the rise in zinc being produced as a byproduct from either copper mines or other sort of mines, mostly from copper mines. So I split up the data, and this is the whole data for resource and reserve grade over time. And you can see the drop-off in resources and reserves from sort of 5% to maybe 2% as a whole. If we take out the ones where zinc is the primary commodity, the drop-off is not quite as severe, but it's still very pronounced, so from 6% to 4%-ish. And we see a rise in the, well, we see a fall in the resource and reserve grade for zinc as a secondary or byproduct commodity. This chart is looking at the resources and reserves, the reserves for the zinc as a primary commodity versus as a byproduct commodity, and there is a distinct increase in the amount of zinc that is coming out of mines as a byproduct, as opposed to ones that are producing zinc as its main economic commodity. So the end use of zinc, you can either view it in sort of the way it's used or the sector that it's used in. There's pretty consistent data for this, and half of it is used in galvanizing, and most of the rest of it is used in zinc-based alloys, either die-casting alloys or brass and bronze. Use by sector, it's 50% once again is used in construction. A lot of that is zinc coatings, galvanizing coatings on steel girders that hold big buildings together. About 20% is used in transportation, trains and trucks and cars. And the question is whether these are sustainable and ongoing sort of uses for it. And I would suggest that, I've been hearing about other coatings for steel for 20 years or more, and we still like galvanizing steel, and we like galvanizing steel because it protects it very well and it stops it rusting. And if you're building a very tall building, you would prefer that it didn't rust and fall down. And it's currently an economical way of stopping steel from rusting and building buildings. You don't need to make cars out of steel. You could make them out of carbon fiber, but currently we make cars out of steel, and we galvanize the steel so that the cars don't rust. The uses will change as technology advances, and growth uses for zinc are zinc and fertilizer, which is becoming increasingly understood and increasingly used, and it improves the yield of many important food crops. Zinc bromide batteries are an important competitor for lithium-ion batteries. And the use of zinc components in robotics, that's part of the die-casting industry. Little bits of robots. One of the interesting properties of zinc components is that they have low friction, and so they're very useful for making parts of particularly industrial robots. Okay. The new projects around the world. So this is the top 30 by contained zinc, and just a quick scan down the grades of those. Most of them are less than 10%. A lot of them are around 5%. Some of these I reviewed maybe 20 years ago as potential acquisitions, and said, "Nah, well, we're never gonna develop a zinc deposit at 5%." So the point is that this concurs with the sort of falling head grade and falling resource and reserve grade story that we see throughout the zinc world. The exploration, being an exploration geologist, I've been very close to exploration budgets rising and falling. There was not a lot done in the 90s. It sort of really did the opposite of peaking. It troughed in the sort of early 2000s. And then we see an upsurge of exploration again. I would suggest that most of this exploration was done on projects that were already known and have been drilling out resources in projects that were previously thought to be uneconomic and which may well and will almost certainly be economic in the future. This is S&P's significant results, and I don't quite get. I don't believe that there were no holes whatsoever drilled in 2009. I think we're a bit short on data, but there certainly was not a lot happening then. But I would argue that most of the significant results came from projects that are already known on resource drill outs. So concluding, we're not going to run out of zinc, so don't be worrying about zinc until 2049. We have the resources and the reserves well known. That is assuming linear growth. We haven't discovered any new important deposits recently, but that would all have to be brought into production to meet linear steady state growth, which is what we would expect. So the question is, how are those resources, and are those resources going to be brought into production? Certainly some of them will, and I have no doubt we will hear from some of the better ones in the next talk. But others, I certainly find it hard to see how they're going to be brought into production. So the future is in deeper and lower grade resources, unless we're exploring and being successful exploring. So therefore, a higher price is required to develop those. If the price isn't higher, then they won't be developed, and we will go into serious shortfall. So I was thinking that where we used to consider 10% was about a rule of thumb for the economic grade for zinc. Now we might be thinking that it's closer to 5% rather than 10%. The price that you need to develop something at 5%, I'm not quite sure, but I'm guessing at least $3,000 a ton would need to be the sort of lower price in order to get these things into production and meet the demand. So absolutely no doubt that the market will be tight. The market balance is tight for a few years, and there is nothing anybody has forecast that would suggest that is going to change. So new projects have challenges and therefore require somebody's got to put a higher price into the model in order to make them economic. If they're not economic, they won't be mined. And so that leaves what I would see as a very good opportunity for explorers to go and explore in the high grade but lower volume space, where it will be much easier to get into the first quartile of the cost curve if you're competing against large mines that are mining at 5 or 6%. And the future of the zinc industry will depend on exploration, and it will depend on exploration in areas which are currently undercover or otherwise inaccessible. Thank you very much indeed. Sorry.